Sort them out, alright? I don't really care if you interrupt. Alright. So, first off, for the people who did watch the video, do you guys have any questions about the video? Or for those who didn't watch the video, do you guys have any, like, questions about what the video was about?
Nah, I'm good.
Anyone else?
Yeah, I have a question about the drawing and trading the zones. Like, what do you mean by that? I just got home from work. I didn't really get a chance to watch the video.
Alright, so here, let me just do this. Everyone hop on the stream. Everyone look at the stream and then we'll get a better understanding. Oh my fucking gosh. Alright. So this is a naked graph or naked chart. This is from today. Hold on, let me text this fucking. All right. So who knows how to do technical analysis? Do any of you guys know how to do technical analysis? Can you guys hear me or no?
Yeah, we can hear you.
All right.
I don't know what it is.
Jebbe. All right. So
I think I've done a little bit of it, just like the support and resistance.
Okay, gotcha.
But that's all I covered. Yeah.
All right. So basically, whenever I wake up in the morning, all we can see is pre-market and after-market and what we saw yesterday, right? So first thing I'm going to do is I'm going to look in pre-market if there was any big dips like this. Big dips or big buying. So the past couple of days, if you go back here, you know, a big buy. The day before, huge buy the day before, right? So that's mainly what I look for whenever I first wake up. And again, I wake up like at 7 a.m., 6:40. So I wake up when the market's already open because I don't want to be trading unless I have a few candles already opened. So first thing I'll do is I'll look pre-market. All right, so we're gonna see where is our first supply or demand zone. So for this one, it's a small one, so you kind of have to zoom in. Jebba, you can just talk if you want. You don't need to type in chat. So right here, as you can see right here, right, there is this candle before the big sell-off. So the last opposite candle, whether it's bullish, so if it's bullish, it's going to be a red candle, and if it's bearish, it's going to be a green candle. So from the top of this candle to the bottom of it, I drew a zone that's going across. All right, down here, big buy right there. So I'm going to go right here, and it's me from the top of the candle to the bottom of the wick, right? And say right here, this was going to be a supply zone because of a sell-off, which this should not be a supply zone. It's not a big enough move to be a supply zone. But it would be from the bottom of the candle to the top of the wick. If we're going up, you don't include the top of the wick right here. You can barely see it, but it's there. And then right here, since we're going to have a supply zone, supply zone, we don't include the bottom of the wick right here, okay? So the wick does not count for the bottom if we're going down and for the top if we're going up. So these are my two zones right here, okay, that I would see in the morning that I would probably trade off of. So I'd send those across all the way to the end of the day. Oh, hold on. Alright. Boom. So this right here, a supply and demand trader would see, that'd be their chart right there, right? But that's not really enough for me. I want to be able to trade more. So since I'm waking up like at 7 a.m., right, I'm waking up right here on this big green candle. So what I'm going to be able to see is I'm going to be able to see this big dip right here. I'm going to be able to see that we touched up here. I'm going to see this right here. And then I'll go back a little bit and see if these are touching anywhere else, right? So this right here acted as resistance. Broke through. Acted as resistance. Acted as resistance. Broke through. And then over here it's acting as like support kind of. Right here, support. Okay, so now this line, I know it's been touched a lot of times. So this right here can be like my three main points right here of contact. And then say I think that we're going to break way below on the day, I'll have to go back and I'll see, okay, support right here. Okay, this is huge support because we were in a downtrend, and look, it bounced off. That's a really big support right there. Go back a little farther. We could even use this if we want to, but I probably wouldn't use it. It's not super reliable right there. If we think we're really gonna tank on the day, we can go down here. Just for the video's sake, we'll go right here too. All right, and then for the upside, right? So we did actually end up on the day going up, right? So if you wanted to find levels higher, we could go right here. I probably wouldn't, it's just really close, right? But we could if we wanted to. I'll probably go back a few days and see if we were at this level. It's easier if you just scroll back right here. All right, so there's nothing right here, right? For like this 398 and above. So right there, it's gonna be really hard. We're gonna have to look up like the 1 month chart or something like that. Like the other day, whenever SPY was pumping crazy till from like 376 or something to 390, right? I had to go way back to find my levels. But since I can't find anything, I'm just like real quick, I'm just gonna use these levels right here for like our high of the day that we think it could be. So in the morning, this is what I would have drawn out already. Like whenever I first wake up, I would draw. I wouldn't, even if I saw an A+ setup, I still wouldn't take it unless I had these levels drawn. All right. So now I'm opening my chart up and I'm really trying to see everything. So I would go at 7 a.m. right here, and then I would have seen a play. So right when I woke up, I would have drawn my lines out, and this would have played out right here. 5 minutes, the 7:05, I would have seen a candle open completely above my zone, and I would have said, okay, we're pumping. Like, and I would have bought a call right there. And as soon as we got to this supply zone, I would have sold. I wouldn't even held it. I probably would have sold a little before because there's sometimes it'll just get close and then have a reversal. So if I see and I want a complete open above. See how it's not even inside, right? Like it's touching the top, but if it's touching the top, that's fine. But if it's just like halfway inside, like right here, it's like still inside it, right? I wouldn't play that. Like as a put, if that was a put right there, I wouldn't play a put. I would see how it went way down. Some people would have bought a put right here because like, oh, it broke through a supply zone, but it hasn't broken down until it closed. And I only trade in the 5 minute, by the way. I trade in the 5 minute, and then down here 1 day 5. That doesn't matter because you're always moving around like this. So right here, some people would have bought a put right here, and then it would have reversed on them. Eventually, it would have played out, but you need to wait for confirmation for it to open below, or for you to wait till it opens above. All right. So right here, I would have waited for it to open above, bought calls, sold it almost at this area, which that would have went from 397.2 say to all the way up to like 398.5. That would have been a major profit. That's like what, $2.50. Insane. That would have been a couple $100 profit, or not, maybe not a couple $100, but I would say at least a 30 to 50% gain. And then same thing over here. We see we're wicking this, right? And I don't know if anyone trades patterns like a descending wedge or any of that bullshit. I don't believe in any of that. It's basically just price action, supply and demand, support and resistance. So as you can see, we did like a technical like triple tap, I think that's what they call it. So we went up, wicked it, and then this right here, we didn't even get past it. So then I would have said, okay, probably gonna go down, but I wouldn't have bought puts right here because there was really not enough confirmation, right? Once we saw, if I would have saw it open below this, then I would have bought puts, right? But even right here, we're getting near demand zone, so it's risky, right? We could see reversal come right out of that demand zone. So even around this level, I still would have been like, I'm just gonna wait to see if it played below the demand zone. I would have bought puts, and my target would have been like 395.27, because from my experience, once it breaks out of a demand zone or supply zone hard, it's gonna go in that direction pretty hard. So once I saw this candle right here again, like just like this one here, it broke up, hit that supply zone, and then I would have sold. Once I saw this candle play out, break completely above it, after the 5 minute, completely opened above, right? I would have bought calls right there, and I would have sold them once we got close. So this right here, I wouldn't have sold it yet. Would have probably sold it or somewhere around here, and then waited for my next entry, right? Typically, I like to take one trade a day. Take one trade, analyze it, see what I did wrong. If it's a bad trade, see what I did right. If it's a good trade, and think about not what could have happened. Because like, say I bought a call right here, and then I sold it way up here, that would have been the best, right? But I probably would have bought a call right here and sold it like right around here. So why would I have done that? I could say, JP, well, you could have sold it up here. I would ask myself, okay, well, what was telling me that it was going to go up there? Really, there's nothing right here telling me that it's going to keep going way higher, because we're nearing a supply zone, which you saw once we got near it, we had a little turnaround, right? A little retest, but we stayed above this line right here, this support line. So from there, we went back, touched the supply zone, and had a major reverse right here. A major reverse. See how these supply and demand zones are really, really critical for knowing or having a good idea of what's going to happen. As you can see, we hit it, comes down. Hit it, comes down. But once we break through it, we have a retest and then a bigger jump, right? And then from there on, you can kind of see what happens. But that's basically what I do in the morning, and that's how I structure my trades. I wait for a complete open above my supply zone or demand zone. Supply zone is when there's too much supply, it's going to go down. When there's too much demand, it's going to go up. So I wait for a complete open above or below a supply zone or demand zone, and that's when I'll get into my play, okay? And some people only trade supply and demand zones, so the only thing they would have on their chart is these yellow lines and these yellow boxes. And you can make these lines and boxes and candlesticks whatever color you want. This is just the colors that I have. These yellow boxes are sometimes the only thing that people trade with. I personally like to have these levels just to kind of have an idea of where I can sell, where we might be nearing a little bit of a slowdown. Because say someone would have been like, okay, we're coming, let me look for a spot where it. So like someone could be like right here. They could have said, okay, so we're going, we broke through the supply zone, but now we're turning around. Like, why are we turning around? Well, because we're nearing resistance, right? This high right here is acting as resistance for us right here. And so someone would have been like, okay, we're getting out and we're done, right? And so now it retests, like, oh, thank goodness, we're having a reversal now because we barely broke out of the supply zone, and now the supply is coming in and everyone's gonna start selling. No, it was just a resistance, and then they retested for a positive, like a uptrend still, like higher highs, higher lows, right? So higher high, higher low, and now we're just gonna continue higher before a break of structure. So that's why I have the support and resistance lines, just to know right here, okay, because if I couldn't see this, say I was just right here, I would be like, okay, yeah, we're probably just gonna sell off now. But back now I see this, oh, okay, it's just resistance, so we can hold a little longer and see what happens. And if we end up if we open below the supply zone, then yeah, we'll probably see a more downside. But we never opened below. We never even got like really close to it. We got like halfway through it. And then as you can see, this candle was red at one point. As you can see, it was down here, and then it went up here and then upright. So that's basically what I do, and that's why I have the support and resistance on top of supply and demand. It's just for further a further understanding of what could possibly happen. Because realistically, I don't know what's gonna happen. No one knows what's gonna happen, but everything that we have is to help us to make the best decision possible for possibly, being correct, being right in which way it's gonna go. And even though it breaks out of a supply zone and retests it, it could still fall through. This isn't 100% time, like 100% of the time gonna happen like amazing, right? Like look right here, we saw a downtrend, right? And then hit this supply zone, the same supply zone, right? So we should technically sell off from here, but we came up and then continued selling off. So someone could have said, okay, we're in the supply zone and we went out of it, so we must be buying, right? But no, you have to wait and see how it plays out, right? So if we had a complete open above 398.97, maybe we could have seen some upside, but since it was just really choppy, we were destined to go down more or go further down. And so technically, once a supply zone is traded through pretty heavily, like it did right here, so it went from say 398.12 all the way up to about 417, so about a $2 jump, right? We could pretty much say this is invalid now, but I like to leave them on there because sometimes it just acts as an extra supply, or not supply, support and resistance line, but it's just a little bit of a thicker one. As you can see, that happened right here. It's back to that support, came up right here, resistance, and then just continued to fall down and down and down before kind of staying above this support line, right? And then playing out. But yeah, so that's why I trade supply and demand, and I also have the support and resistance. Does anyone have any questions about my explanation? I know I do talk fast, but does anyone have any questions?
Oh yeah, I'm like completely. Can you explain again where you put your two yellow lines and why that is?
Yeah. So for one, if we're at the end of this call, if you still don't understand, you could always watch that YouTube video. It's super good. Like I watched a ton of supply and demand videos, and that's one of the best ones I've seen. But So the way it works is you look for a big sell-off or a big buy. And I mean, the buy doesn't have to be literally from like 396.22 all the way up to 398.99. It could, like this one right here is from 397.9 up to 397.85, which is a pretty big buy, in my opinion. So right here, as you can see, from the top of the candlestick to the bottom of the last opposite candle. So this is a red, it's a sell-off, right? So you're gonna look for the last green candle, and you're going to mark the top and the bottom. So if we're on a downtrend, you're going to mark the bottom of the candle to the top of the wick. So the candle is the big bulky part of the like the stick, and then the wick is the very end, like a candle wick. You know, it just barely comes out of the candles when you're burning it. So you're looking for this, something like this, the top of the candle to the bottom of the candle. This doesn't have wicks. So right here, we would have also extended this line to the top of the wick. Here, let me go like this. So say there was like a wick right here, like a couple meters high, or a couple millimeters high. We would have drawn this to the top of the wick as well. So now that supply zone would have been a little thicker. So down here, as you can see, we drew from the top of the candle to the bottom of the wick because we're going up. So if we're going down, you don't draw the bottom of the candlestick, and if we're going up, you don't draw the top of the candlestick. Another thing with supply and demand zones, like someone could say, okay, so this is a pretty big one. So we could have said, okay, well, this was a big buy, and then this right here could be a supply zone. Yeah, it could, but I don't like to draw areas like this, like that are just really big. Sometimes yes, but sometimes no. So this one is a pretty big one, which would have actually been a pretty decent one, as you can see, but I mean, it's just a little big for me. I like smaller demand zones or supply zones that I can really just see when I'm on my chart. This right here would have been a pretty big one, which probably would have been a pretty good one too, because as you can see, we came down into it and bought off of it, right? But yeah, you really just like right here would have been a giant supply zone right here. Like, see, we had this huge candle. Someone could say, okay, that could be a supply zone because we had a big sell-off after it, but like you have to be like realistic too. And then you also have to remember that all of this has to be extremely predictable, because the market makers are trying to predict what the retail traders are doing, which is all of us are retail traders. So if you look at all of this stuff, it's at very predictable places, because the market makers are going to say, okay, we're going to go down and we're going to do this before pre-market and then an aftermarket, and we're going to try to make it seem like something's going to happen. And so when everyone says, okay, we broke through supply zone, so we're going to keep going higher, they're just going to touch our resistance right here and just go down. Look at this, a consolidation and then a bunch of retests. Everyone's like, okay, we're basically gonna break through because we're just having so much buying power right here, and then they just sell off, right? And so the market makers right here, they sell everything. So everyone's like, oh no, we have to sell everything. It fills all of their orders, it builds liquidity for them so that they can buy even more. And look at this, they just send the market to the roof, and then they have and then once the market makers send the price way up here, look what they do. They just sell off everything, leaving everyone else screwed in bag holding. So that's really what you have to understand, is you have to be as predictable as possible with all of this stuff. That way you can follow what the market makers are doing, because you're never going to, if you follow the retail traders, you're going to lose your money, because 95% of traders lose out and the market makers always win, because the market makers, they're the ones that who are making these pumps and these sell-offs. If you notice, like on a day that the banks are closed or it's when it's a holiday season, the market doesn't move like this, like super big pumps and dumps every day, right? These are the market makers coming in and really moving the markets. And technically, yeah, it is considered like pretty scummy, right? But that's why you have to think smarter than your average retail trader, right? You have to just follow the big dogs, because that's just really that's the only way to make money, just following the big dogs. Because they say, oh, I'm a Robin Hood, like I can do it without having to follow the big dogs. You can't, you really can't. But yeah, so does anyone have any questions on anything I just said?
Is this going to be on YouTube?
Yes, I'll post it on YouTube.
All right, bet.
Does anyone have questions or anything? No questions?
Nope.
All right. So the next topic was going to be, let me check. Well, so the options chain on Webull. So there was a couple people who were confused by it. So we're going to hop on Webull and a picture of Webull. Let me stop streaming.
Yeah, the way that I set my, well, when I went to set up my account, I guess I didn't like seem like I had a lot of like experience, so they said that like I couldn't options trade yet. So
yeah, and most people lie on that anyways. It's not really.
Well, I would I would have done that, you know, had I known that. But whatever, you know, it's all good. It's all good.
Nah, yeah. I'm gonna look for a good picture. Can someone actually send a picture of Webull and what it looks like? If you guys can, I'll do it. If not, but I'm trying to look for a picture online, but looks like there aren't any. So let's just go. I'll go my phone. Let's get a picture. I'm gonna screenshot a picture of Webull so that I can show you guys how to work it. Has anyone traded on Robinhood here? Like, have you guys just seen where when you're trading options, it's just calls and it's up and then puts are down? I don't know if you guys have traded on Robinhood. It's super easy to see. That's not a good one.
Yeah, I traded on Robinhood before.
Who was the one today that didn't know how to like work Webull? I don't remember who it was.
I remember, let me go back to the chat here. I remember someone said that they had a hard time about setting up the account or something.
No, it wasn't about that. It was about the options chain. So like, if you guys want to go to my look at my what's it called, stream, let me know whenever you guys are all on it. So I'm just gonna talk about it. So the day expiration. So something that's brand new this week that actually hasn't always been there is 0 day till expirations contracts for SPY. That used to only be for a very few stocks or certain stocks. That there was expiration contracts every single day. Usually it's every 3 days. So like Monday is one, then Wednesday, then Friday is one, but now it's every single day. So one thing about options is that if you buy like a 0 day till expiration, so say today was Monday and I was trading the 0 day till expirations, but I sold them like before 10 o'clock. So I was just completely safe from theta like really messing with my profits, which theta is time decay. So say tomorrow morning, whenever we wake up, if SPY did not move at all of these contracts would lose like probably 5 to 20% just because of theta, just because it's time decay. The longer you wait to sell your contracts, the more in value they're going to lose, because the less likely it is that they're going to reach the price that you think it's going to reach. So say you buy a $399 call. So the calls go down. All right. So the most expensive call will be $391, 5.1. So that's $510 because they are in the money. So all of these contracts right here in the money, as you can see, it says ITM with an arrow pointing up right here. These are in the money contracts because the stock price is above these numbers already. So whenever you're buying a call, you're basically betting that the stock will go up. So once the stock price consumes 396, 397, these will now be in the money, and then 398, 399, 400 will be out of the money, and vice versa. If 395 goes down, if the stock price goes down to 393, 394, 395, 396, and so on will now be out of the money. So we'll see this red bar a little higher. And then same thing for puts, ITM with the arrow pointing down. So all of these are in the money and these are out of the money, because you're betting that for puts, you're betting that the stock price is going to go, say, from 400 down to 391. So say the stock price is at 395 and you think we're going to have a red day and you think it's going to reach 393, you would buy a 393 contract for $85. And then as the stock price moves down, your contracts will get closer to being in the money because the stock price will consume 393. One thing to keep in mind is with trading calls or puts is just because you buy a 393 contract doesn't mean that it has to go to 393 for you to make money. If you buy a 393 put and the stock price is at 395, even if it drops to like 394.50 cents, you're still going to make a good amount of money. It's just that it's not all the way to 393, right? Just because it's getting closer, it'll gain value because it's more likely to happen at that point. So typically, what I do, so today, I forgot what I bought, but say it was at 395. I was pretty bullish today because what I saw in my charts. So I would have said, okay, I think it's gonna hit 397, but 1.54 is just a little expensive for me, so I'm just gonna buy 399 calls, and it ended up going to 399, but I would have sold it at 397 because that's where I thought I was gonna go, and I would have got a little bit of profit, right? So just because you think, okay, it's gonna go to 397 doesn't mean you have to buy a 397 contract. You could buy any of these that you want because they'll all go up in value if the stock continues to go higher, right? And then also the farther out the contract, the more profit that you can get because you're only spending 0.82. But say that it goes in the money, it'll now be worth 2.48. So you'll make over $100, like $160 on that, right? So yeah, that's kind of how this works. The calls go down, so as the numbers get bigger right here, and you'll just click on one of these bars, right? I click, so say I want to buy put, I'm going to click up here, or if I want to buy a call, I want to click down here. I never buy in the money just because they're so expensive, and like they make good profit, but it's just so expensive, and I would much rather spend a little bit of money to make, still like almost the same amount of profit. But yeah, so I buy out of the money. So in this bars or these bars. Does anyone have any questions about how this works?
No, I'm good.
Everyone's good? All right. So now the last thing that we have to talk about is just setting your account up. For me, even when I first started trading options, I looked it up why I didn't get accepted, and it was just because I didn't have enough experience, I didn't have enough capital, and I was like a long-term trader, right? So to get accepted for options trading on Webull, you need to, for one, you have to be a speculative trader. Your intentions have to be, I'm trying to think that your intentions have to be like speculative trading, which is what I just said. And then you have to have like a certain amount of money built up. And then for your income, you have to have like a certain income, or like a certain job, I'm sorry. And then you also have to have like a certain amount of experience. So for the experience, just don't put the maximum, but don't put the least, right? Because the least is not going to get accepted. The maximum, you'll get too much acceptance. And you don't want to be a beginner and have options level 3, because you're just going to be a little confused with that, right? So hop in the an account. All you want is options level 1, because that's all pretty much anyone uses. They just buy and sell puts and calls. That's all you really need to do. So when trying to get accepted for a Webull account, a Robinhood account, a Thinkorswim account, any account that you want, just remember you have to have speculative as your goal, and then you also have to have a decent amount of reserves in your bank or capital or savings, whatever you want to call it. And then you also want to have like short term in mind, like what's your time span on investing. It's going to ask you to be like short term, and then have like 2 to 3 years of experience. And then when it says like what's your knowledge level, put like expert, and then just what you think is going to get you accepted, because in reality you're not going to be able to get experience without learning and being in it, right? So you have to just lie, or otherwise you're never going to get the experience. But that's just if you want an account. You could still paper trade on Webull without actually having a trading account or a brokerage account. As long as you have the app, you're able to trade. And I'll actually show you guys how to do that real quick. So when you go to your phone, you see Webull, and then it takes you right here. Right here is your watch list. Right here is your account, and then you have your password. This is once you set your account up. If you go to the middle and you don't have a brokerage account yet, it's just gonna say set your account up. You'll apply for an account, and then it'll give you an account. Sometimes it'll be instant. Sometimes it'll take 2 to 3 days. It's really just up to what's going on. This right here is the markets. You have the NASDAQ, the world, the crypto, SPY, everything right here. And then right here, this is where your profile is right here. And then from here, you'll click on paper trading, and then it'll bring this up. You click reset up here. You'll put the amount you want to put in, and then you'll click confirm. I'm on my so I started with $500 in this account, and then I'm just gonna see where I can take it, right? So then quick trade, it's gonna bring up some stocks. I only click SPY, and then it'll let you trade SPY. This is if you want to actually buy SPY. And then for options, you'll click the second one, options trade, click the stock, SPY, and then it'll bring you up to options chain. And then for the third one, it says, let me show you guys. So for the third one, it says orders. This is all the orders that you place, whether they get filled or whether they don't get filled, whether it's a sell or a buy. And then the last one is performance. So this is actually going to let you keep track of, how you're doing right here. So as you can see, last month $67 in the pot, like plus $67. Last month plus 13.4%. It's gonna let you see what days, like daily, how are you doing. Stock P&L, it's gonna show you actually what stocks you trade and how much money you've made or lost per stock. So say I've traded 10 stocks, it's gonna show me my P&L for every single one. And then yeah, that's pretty much all there is to options trading. When you have a contract, it's gonna show up right here. When you have an open order to buy a contract or sell a contract, it'll be on this tab, and then you can actually go and modify that or cancel it right there. But that's how to paper trade. And then if you want to get set up like with an account, that's kind of what you need to have on your resume, so call it, that they give you. Does anyone have any questions on any of that?
No, that was great, man.
All good.
No, we good. Oh, JP, I got. Don't worry about it. I got my thing approved already.
You got your approval? All right, good.
Yeah.
All right. Anyone else? Does anyone have any questions about anything now? Like just anything?
I think we're all good.
All good?
All good. Holy
All
shit.
One
got
question.
What did you say?
You got it, man.
What's the difference between bidding and asking?
Bidding and
option
asking?
trading.
Okay. So a bid is someone who's trying to buy. So say, I don't know if any of you guys watch Vukum on TikTok. He's like the watch selling guy. Whenever he goes to sell a watch with someone, right, they have a huge spread. So one guy will say, okay, I want to buy the watch for $13,000. And then Vukum will come and say, no, I want to buy it for $12,000. And then that's the spread. So the spread is $1,000. So the bid is $12,000. Vukum is bidding $12,000 to buy it, and the other guy is trying to sell it. So the ask price, he's asking $13,000. So now there's a $1,000 spread in between. That's obviously very extreme for stocks, but say it was a $1. So someone's trying to sell it for $12, or someone's trying to sell it for $13. This guy's trying to buy it for $12. So this guy's asking for $13, and this guy's bidding $12. It's a bidding war all day. So you're always going to see a little bit of a spread, whether it's $1. Some stocks have like a $5 spread. Some stocks have like a $10 spread. And if your options contracts, the higher in value they go, the more of the spread that they'll get. Say you have like an $80 contract, it's just going to be a $1 spread unless there's a lot of movement in the stock. If it's like a $500 contract, you'll see like a $10 to $20 gain sometimes if it's really big. So yeah, that's basically what it is. Someone who's asking is basically right here in line saying, hey, I want to sell my stock for $13, right? And then on the other side, there's someone saying, hey, I'm trying to buy a stock for $12. So he's bidding $12. The guy's selling for $13. Say the stock goes up, the ask might become $15 and the bid might become $14. So now the price of the stock went up. So now they have to sell it. They're selling it for a little more. So now the bids have to come up and match that, right? Now say this is also where supply and demand comes. Say there's no one selling. Now what do they have to just bid way up so that someone's like, okay, yeah, that looks like a good number. I'm going to sell now. Or say the opposite and say no one's buying. So now the sellers have to come way down until someone's like, oh, that's a good number. I'll buy it for that much. And then that's what creates supply and demand, right? So the bid and the ask, the bid is the person trying to buy and the ask is the person trying to sell. And the bid and the ask is just the number what they're trying to buy or sell for. Does that make sense?
Yeah, that makes a lot of sense. You completely cleared it up, man. Thanks.
Yeah, no problem. Did you have a question, Max, or no?
Oh, no.
Oh, no? All right. Did anyone else have a questions? Yes, 21541 or Remzi, any questions?
Yeah, I was just gonna ask a personal question. Is that okay?
Yeah, it's all good.
I was just gonna ask, how long have you been trading for?
So I started trading stocks back like 2018, 2019. I really don't remember. But I was just trading shares. I didn't know about options until like a year later. But basically, I was just trading stocks, buying and selling shares and seeing like how much I can make. and I ended up not making anything really, just broke even kind of at the end, maybe lost a little bit if anything. Then I found out about options, coming across like you, because I would always watch like analysis of stocks on YouTube because I didn't like to actually read, so I would just watch the analysis, and then came across a video one day that said how have I made $30,000 in one day, and that's basically how I found out about options trading. And from there on, I've just never traded shares again. I only trade options now. And I dabbled in crypto a little bit. I made a ton in crypto whenever it was like a bull market, because everyone's a genius in a bull market. And I don't touch crypto anymore. That's just whack. So yeah, that's how I started trading. And then I've been trading since 2019 or 2018, so like 3 or 4 years.
And have you made a decent amount of income from it?
So the thing about stocks and crypto and everything that you trade, it depends on how much you want to make, right? So if I want to make $1,000 a month, I need to have like at least $10,000 to $20,000 to $30,000 in an account. I've never at once had more than like $100 or $500 in an account. So for stocks, I would always do like $100 or $500 in at a time. So I would always lose that. But whenever I went in crypto, I went big. So crypto is where I made all of my money trading per se. But for stocks, I'm just down on stocks, right? So once I put more money into stocks, and then I'll grow that to, offset my losses, and then I'll just keep compounding my account, because that's when you actually are able to like make money and actually take it out. Because when you only put like $500 in, you're actually not able to take any money out, because you want to take a good amount out, right? You want to have like and then you don't want to have like a $30 gain to take out on Friday, or like a $20 gain to take out on Friday. You want to have like a couple of thousand, right? So that's really why I've never taken money out, is because all of my gains were never like big enough to be like, okay, yeah, this is a good gain, I should take it out now, right? It's always been like, okay, well, I want to keep compounding, making my account bigger, so that the amount I could take out per week or per month is going to be a lot bigger. For crypto, I kind of got tired of like always watching it every day and how volatile it was, so I ended up selling for like a couple 100% in gains, and then I've just been done with crypto ever since. I don't touch it anymore. But yeah, so I made more money in crypto than I have in stocks, but I make enough money to take out sometimes.
Wait, can I step in on this one?
Yeah.
Wait, who's the one that asked me? Who's the one that asked that question?
I don't know.
Or who's the one that asked? Okay.
That was me.
Coming from my experience for like 6 months, since I don't know if you know, but like, okay, since I did paper trade on stocks, right, and I started from my original like 377 to 1,500, right, for this past 6 months. I would say that if you're gonna start this, just know you gotta know your risk, right? Your risk is your important thing right now, and you need to know your limits, okay? Because when you're in a stock, right, don't get all emotional. Oh my God, I'm sorry. Don't get all emotional or anything, right? You need to know that. You need to know your limits, right? And know that even the less money you have, just know that. Just remember that that money that you keep earning, it's gonna build up to like 1,000, right? Since, let's say, JP, right? I don't know, JP, how much you're starting with?
500.
Okay, you know that like the more you earn the money, the more it's gonna build up to 1,000, right?
Yes.
Yeah. So just know that over time, that money that you're investing on option trades or long term, it's gonna build up. Just know that the risk can be high or low. It's just that's all on you, and you just need to know that. How do I put this? Just need to know what risk you're taking and know your limits from how far you. That's all I can say to you. That's my advice from what I learned from 6 months.
Yeah, and that's good advice, because like that's another question that a lot of people ask. Oh, they're like, okay, well, how long is it gonna take me to quit my 9 to 5? Well, it's gonna take years, because you're probably not gonna have a lot of money to start with. And if you want to quit your 9 to 5, you need to be making as much money to make as much as you make at your 9 to 5. And I would say plus some, because you want to be having a cushion to say like you may have like a really bad week or a really bad month in stock trading, which happens to people. Then you're screwed, because now you're not having any income, right? For most people, you can trade and have a 9 to 5 job. And like for most people, if you trade and then you don't do anything, most people, it drives you crazy, because you have nothing to do, you're bored all day, and you really have nothing to work for. It's just like kind of easy, right? And then you get lazy, and then you get like, oh, I don't have a 9 to 5, I don't ever have to work. And then you get like your ego starts getting stroked, and then you end up kind of slacking off on your studying with stocks and stuff, and then you just end up losing, right? So for one, you want to have a good size amount so that you actually can take money out. If you only have a $1,000 account or a $2,000 account or a $3,000 account, and say you only make like 40% every week, or 40% every month, I'm sorry, you're going to be taking home like 400 or 800 or $1,200 per month, which I don't think that's enough to live off of, right? And would you rather be taking home that much or like 20K a month? So you really want to make sure you're compounding your account for as long as possible before you start pulling out, because the more that you compound it, the more you're going to get to pull out whenever you actually start pulling it out. And for most people who are like, oh, well, how much do you make? Or I want to make this much. Okay, like you can make that much, but it's just going to take a really long time. So you have to look at your time frame. If you want to quit your 9-to-5 job in a week, not happening. This is not the place for you. You need to go somewhere else and find some other lucrative business that's going to allow you to do that. Now, if you're looking to quit your 9-to-5 in 2 to 3 years and live off of this completely, okay, yeah, this could work out if you really put the time and the effort in, and you could compound an account if you have the right knowledge and the right group around you to help you out and compound it to the amount where you can quit your 9-to-5 in 2 to 3 years. Me, I don't think I'll ever quit my 9-to-5. My 9-to-5 will change into something that I'm actually passionate about, right? Most people have to work a 9-to-5 that they don't like, and that's why they want to quit it. Some people work a 9-to-5 that they're just lazy, and so that's why they want to quit it. For trading, I will probably always trade and always work my 9-to-5 just because my 9-to-5 is what keeps me happy. It keeps me busy during the day. If I'm just at home, if you're just at home all day, you're just depressed, right? And you also can't trade stocks unless you're making like like $10, $20, $30,000 a month. You can't live the life that a lot of people are living, because in Miami the average apartment is like what, $5,000 for a 1-bedroom. So that's $5,000 that you have to make per month, and then you have to also think about the clubs that you want to go to, the Lambo you want to drive, the insurance on that, the maintenance on that. When you want to go on these extraordinary trips and vacations, you have to be making like at least 40 to 50 to $60,000 a month. A lot of the people who are doing that aren't actually making all their money trading stocks or doing whatever they're doing. They're making most of their money selling a course, or mainly with that, because that's passive, that's steady income, right? The stocks and the crypto and the Amazon FBA, the real estate wholesaling, they're not doing something every single day and making money every single day, right? But the course is bringing in money every single day. So the people, when you see these people online, most of the time they're making way more than you could even imagine you'd be making from stocks, and within like 6 months to a year. You have to be making a lot of money to live a life like that. And I mean, some people are really living that, and some people are faking it. So you also have to think what's realistic and what makes you happy, because that life, you may think, oh, that seems like an awesome life, but it gets old really fast. I know a lot of people who live that life and who are already over it within, say, 6 months to a year. But yeah. Is there any more questions about anything?
I'm good.
Is everyone all
I'm
good?
good. Yeah.
All right. Well, I'm going to go ahead and end it here. I'm going to go eat dinner, and I hope everyone got a little bit of value from this. It'll be on YouTube if you guys want to watch it. If you have any more questions, just ping me in the Discord, at me on, or comment on YouTube. But yeah, if you guys need anything else, just let me know.
Yes, sir. Sounds good, man.